Welcome to Profit Insights, where we dive into the financial currents of the day and explore what they mean for you. I'm Dusty, and today, let's unpack the notable market movements and insights from June 5th, 2025. Yesterday was a mixed bag for global markets. Starting with the US, we saw a rather bumpy ride. The S&P 500 slipped 0.5%, snapping its four-day winning streak. The Dow Jones edged down 0.3%, and the Nasdaq took a heavier hit, falling 0.8%. One of the big narratives here is the steep drop in Tesla shares, down around 14 to 15%. President Trump's threats to pull government contracts and subsidies from the clean energy company left Tesla investors uneasy. In an attempt to spin the market's direction, some positive news emerged from a trade call between President Trump and President Xi Jinping. But the optimism was short-lived. Investors are now keenly looking forward to the jobs report expected today. The Volatility Index, or VIX, took a breather, slipping down to 17.61. Shifting gears to India, it was a brighter picture. The BSE Sensex and NSE Nifty posted gains thanks to blue-chip buying and robust global trends. Indian stocks like ICICI Bank and Reliance Industries led the charge, with foreign funds adding fuel to the fire, a stark contrast to the U.S. narrative. Now let's zoom in on some key stock stories. Tesla, as mentioned, is grappling with political headwinds. But there was a silver lining with MongoDB, which saw its shares jump 13% thanks to strong earnings and a rosy outlook driven by AI demands. Meanwhile, TVH Corp stumbled 18% amidst concerns about profit impacts from tariffs. In India, Force Motors reported a significant increase in domestic sales, though there was a dip in exports. Earnings seasons bring their own rhythm. The Toro Company saw net sales fall slightly, yet maintained a steady earnings outlook. Brown-Forman reported declines, while Lululemon Athletica posted commendable revenue growth. Optical Cable Corporation, on the other hand, reported stronger sales and a narrowed net loss. Turning to macroeconomic indicators, we saw jobless claims above estimates for the second week running at 245,000. A bit more distressing was the ADP's private payroll report, indicating the weakest growth since early 2023. On the inflation front, there's an expectation for a temporary rise due to higher tariffs before easing back to a downward trajectory next year. Across the pond, the ECB cut rates by 25 basis points, and while the euro took a hit, the US dollar rallied, consolidating near the 99 mark. Gold was a bit of a seesaw, balancing above $3,300 after hitting a recent high. Meanwhile, digital currencies like Bitcoin continued to hold strong, trading over $100,000. As we look at oil, futures took a dip as increased inventories took center stage. August Brent oil futures settled at $64.76, with July WTI sliding slightly as well. Fixed income kept investors on their toes too, with U.S. Treasury yields reacting to lagging employment growth. Let's wrap up on a thoughtful note. Navigating these dynamic markets demands a watchful eye. Keep your strategies adaptable, and remember the importance of diversifying your portfolio. React not just to the market noise, but focus on the trends that persist when all else fades. Thank you for joining me today on Profit Insights. As always, I leave you with this thought: when the dust settles, only the truth remains. Until next time, stay informed and invest wisely.